This is a Shares for Beginners quick tip. Essential lessons. Questions answered.
I've been going over old episodes of this podcast recently, and this is from the second episode ever back in 2019. Evan McQuire is a full-service broker from MF&Co Asset Management. He has years of experience in the industry and understands the importance of not letting emotions cloud judgment when it comes to investing. In this quick tip, he shared his insights on the difference between full-service and online brokers, the importance of due diligence, and how to make informed investment decisions. We also looked at some of the common mistakes people make when investing and how to avoid them.
There's a number of different factors that come into it, and the first one is don't get emotional about it. You have to be very careful because a share or stock is what it is. It doesn't have feelings or emotions. It doesn't care who you are. It doesn't know you. It's a stock. It's a share. But people tend to get in this whole thing that, I've bought this and it has to go up. And it just doesn't work like that sometimes. And, if you're somebody in the last couple of years and you thought, I reckon AMP looks good here, and you're looking at it today, that's a very different story. And you have to ask the question, well, what's fundamentally changed? You know what I mean? So there's a whole lot of things that come into it. But in terms of, to answer your question, people get emotional. They don't really understand what they're getting into, as in, have they really done the right due diligence on the actual company they're investing in? Have they been tracking the price action for the past 12 months, 3 years, 5 years? So there's a number of different things that I see. But the first one is where people get sort of emotionally attached to this sort of psychological thing where they go, I've bought it. It's got to go up. Why is it going down? Or they buy it, and there's another one where you get somebody who's bought a stock. Let's say it's a junior mining company or something, and they've got lucky, and it's gone up 30% in a week. Take it off the table, take the profit. Yes. And they go, okay, well, I'm actually pretty good at it. Do it again, and they make 10%. They go, I'm a genius. And then they do the same thing with a different stock, and they lose 40%. They hand it all back. So it's, and it's like, how can this be? It's meant to go up. It doesn't always work like that. So yeah, that's the one thing. Probably allocation of money, as in how much you allocate to a particular stock. You've got to be careful. I mean, some people like to speculate and they're all in, right? And they go hard. And if you're happy to do that and you're prepared to handle the gyrations of the ups and downs, go for it.
People buy and sell shares in the share market via a broker, and there's full service brokers. You're a full service broker,
correct?
And there's the online brokers. You can go through E-Trade or ComSec or whatever and make all your own decisions without any advice.
Yeah.
Can you just talk little bit about that? The different kinds of brokerage. Sure. That's operations that are available.
So with the online side of things, you're getting no advice. You're on your own, and you place your order. That gets put through into the market via an automated system with filters. Nobody really helps you unless you've got a problem with logging in. You call up, it's up, can't log in. It's not like you call up and say, I bought CBA and it's gone down. What am I going to do? Can't help you. End of conversation. With what full service advisors, brokers that talk to clients, the difference there is that you've got a person that sits in front of a screen day in, day out, has access to a lot of information and can help a client navigate the market, companies, and help in the decision-making process around what you should or shouldn't be doing.
It's interesting because you mentioned before we started this interview about it's also part of managing expectations. So I think some people go to a broker expecting them to make money for them all the time, every day, in and out. But that's not how it works. No. That's how it works, is it?
No. And again, it's and you're right. It is about from my point of view in terms of managing clients. We have a number of clients that we work for. It is a lot about managing expectations, education. It's about being able to sit there and say, look, here's an opportunity. There's no guarantees. But we feel there's an opportunity here, and you present that in a way, and you make it very clear to your client what can and can't happen. So for example, if it's a stock, we say, well, general advice is that, you should buy this particular stock. These are the reasons why we think you should buy it. And, these are the risks. That's basically it. I mean, you are right. I mean, it's, the managing expectation side from my angle is very important, because there's no guarantees. If you want a guarantee, go and buy a fridge at Harvey Norman. So that's, you know what I mean? That's where you get your warranty, right? But it just doesn't happen in markets. And there's different, and this is the thing, there's different ways of doing things in markets. You can go long, you can go short. There's a whole different, raft of things that you can do. We'll keep it simple today and buying. So we'll look at that. But yeah, so you've really got to educate people and say, this is what the company does. These are the risks, bang, 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 and make sure that everybody's reading from the same page. Because where it goes wrong from my level as an advisor or a wealth manager, where it can go wrong is if you have a situation where the client doesn't fully understand what they've gotten into, and you end up having these difficult conversations. So, again, it's all about being clear, being transparent, and making sure that everybody understands the risks associated.
When you first started in the share market in the 90s, that would have been that golden era of the floats when AMP and TAB and CBA and all these
that was
big names, they floated.
Yeah.
And we've got that term mum and dad investor.
Yeah.
Do you think mum and dad investors still exist, or have they become smarter?
They still exist, and they have become smarter. I guess one of the benefits of technology is that everybody's pretty much got access to the same information. And what I mean by that is so everybody can get access to the same information at the same time. I suppose, I don't want to get too off the track here. I suppose the difference now is that mum and dad investors are having to deal with, there's a lot of automation in markets now. So there's what I call bots, machines, and they're in there. There's a lot more volume happens now on that than it did 10 years ago. So, if you're a mum and dad investor and dad's sitting at home and he's trying to get set on BHP at a particular price, and he sees this machine come in buying one share. Can't do that. Hang on, I'm trying to get set here. One share. And this is the kind of stuff that happens. 1, 2, 1, 2. So there's all these little things that are happening.
Just chasing fireflies. Isn't it?
It's just, and that can be challenging, especially if you're trying to get set at a particular price. Sometimes you're better off just going in there at market and getting it done, as opposed to trying to be clever and, I'm going to go in there at 31.50 and, maybe I'll be 31.51. That's it. I'm staying there. All right, mate. So these are the things. Look, mum and dad investors are still there. There's a lot of information out there that they can trade online. But what I've found, Phil, over the past few years is that, sure, the online domain is there. Is that a threat? No way. Not a threat to what I do or what we do, because what happens is people blow up at some point, in some way, shape or form.
And blowing up means?
It means that they've lost money and they've capitulated. They can't take any more, and they just go, that's it, I'm out. And they shut the trade and they have, $5,000 loss, $50,000 loss, whatever. And they go, geez, I see the virtues of investing in shares and stocks, right? But I just don't have the stomach for it. I can't deal with it. I'm busy with work and kids and running around, the dog and all that kind of stuff. So I go, you know what? I need to put this back to somebody who can sit there, watch it and monitor it for me. And that's where we come in. Guys like me come in, that's what we do.
Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation.